New Haven, Connecticut. Good morning for Simon Johnson.
Yes, hello, everyone.
Morning.
I was hoping just to make a comment and maybe a quick question.
Go ahead.
Using AIG as an example of what's going on here, I think a lot of us are outraged about the bonuses and whatnot, but I think the media and the government is kind of keeping our eye off the real theft that's going on here, and I consider it downright theft. And that's they're using AIG as a conduit to funnel money to a variety of banks, Goldman Sachs being the biggest one, and as I'm sure the person knows that Summers, Geithner, Paulson, Rubin, they're all part of this Goldman Sachs, whatever you want to call it, that seems to have enormous control over the federal government. Goldman Sachs and a bunch of banks were able to get 100 cents on a dollar on these derivative trades that have gone bad. Now, I know anybody who's got a few stocks and would be more than happy to take 100 cents on the dollar for all their trades that have gone bad, but somehow these bankers have managed to get paid back in full. I personally think these banks should be allowed to go bankrupt. I don't think banking is rocket science. It wasn't rocket science until the derivatives schemes started coming out. And why couldn't the federal government simply take these banks down, let them collapse, let all the derivative trades collapse, let all the bondholders take their losses like everybody else out in the country has to take their losses, and set up just a temporary lending institution? I mean, we're pumping out trillions of dollars. We could set up a temporary lending institution at a low interest rate, 5 or 6%, and at the same time, other banks, the banks that survive, smaller banks will come in and compete with the government, and eventually you phase out the government bank.
Well, I do think that I would agree with the caller that very big financial players, such as Goldman Sachs, have done well out of the AIG deal in particular, but more broadly, out of the way the government has bailed out the financial sector. I don't think you want to move to a situation where the government controls all the credit in the country. We know what happens when you have that level of political control over any banking system, and it's not pretty, because Congress people and others get very much involved in lobbying for credit and so on and so forth. And I think a managed bankruptcy process for some big banks as needed, and this is going to be a very controversial topic, but a big topic in the next 3 to 6 months, I think that's the way to go forward. And I would say in that context that even people who are in favor of bondholders taking some losses, as the caller articulated, are very worried about derivatives contracts and the way in which you have these unexpected spillovers around the world to countries that are even more vulnerable to further collapse than we are, which then, of course, affects us. And I think going forward, that's something you've got to look at very carefully. Can you let any business be created within finance, for example, that's so complex that you cannot put it into bankruptcy or even a government-managed bankruptcy, prepackaged bankruptcy process? If you can't, if it's that scary to let it go down, perhaps it shouldn't exist. Because the costs right now, in terms of the additional support being put into the financial system, are just excessive.
You want to tie that comment into whether GM goes bankrupt? What are your thoughts on that?
Well, I think that's a nice contrast. I think GM can still avoid bankruptcy if it persuades the unions and creditors and other people involved, suppliers, to share in some of the losses and to restructure their contracts and so on. But bankruptcy is a reasonable threat. Chapter 11 bankruptcy, it would be quite a sensible potential option for General Motors, and the President said that last week very clearly. It's clearly a threat against General Motors. You hope to avoid it, and the government will provide them with some financing either way, because the people who usually provide financing in bankruptcy in this country are not in much better shape than anyone else right now. So the government's going to be involved. Bankruptcy is an option, and that's the difference between GM and a really big bank. Really big banks, you are not being threatened with bankruptcy, in part because it's very scary to think about what would happen if they did go bankrupt.
What would you envision on the other side of that bankruptcy for these bigger banks? So you'd say that goes through on some of these larger banks or financial institutions. What do you see on the other side when that happens?
Well, what I'd like to see, I'm not saying that it definitely happens, what I'd like to see is the banks being broken up. I think they've become too large. We have banks in this country that have a balance sheet, total assets and liabilities around 10, 20% of GDP. That's too big. In Europe, by the way, it's gone even further. It's much more dangerous. They have individual banks. For example, Royal Bank of Scotland in the UK has a balance sheet, so total size of the bank, 2 times UK GDP. That's where our financial sector will go unless we stop them right now, break them up, make them smaller, make it easier for them to fail in the future, make it less scary for them to fail.
Let's go to Overland Park, Kansas. Morning. Democratic line.
I'd like to say a comment followed by a question. I see it, first of all, my comment, I see our government as a large buffalo being beset on by a pack of wolves which represent the corporatization interest in our country, and they are ripping apart and disemboweling our government through privatization, no-bid contracts, and everything else, and therefore limiting our ability to have a functioning government and a functioning democracy because of the corporatization. Now, I'd like for you to compare and contrast the economics behind what happened in Chile, Argentina, and following the fall of the Soviet Union with the banking system and fundamental international funds now with our country, with what happened in those countries.
All right, Kansas, thank you.
It's a very good question, and lots of people are asking a question like this. And I would not, I would try to urge you not to oversimplify this comparison. If you take a situation like the Soviet Union, I was actually working at the end of the Soviet Union and the beginning of the Russia and the other independent states that were created. This was an economy where the state dominated everything. There was very little scope for individual enterprise, and there was definitely an argument for moving things more into the private sector. You can raise legitimate concerns about the way that was done. I think that's absolutely fine, but more private sector activity made sense there. And I think the same case can be made for other countries such as those in Latin America and South America that you mentioned. I think the approach that I'm suggesting we take is not at all to turn our backs on private free enterprise. I think your buffalo being chased by wolves metaphor actually works pretty well for me. But and letting the private sector get too powerful, too big, letting individual sectors, particularly the financial sector, become too strong, I think is dangerous. I hear from a lot of other business people, a lot of other private sector, private entrepreneurs, who are very strongly supporting the views that I'm putting forward because they themselves are so angry at what the financial sector has done and been allowed to do in this country.
In addition to your professorship at MIT, you're a senior fellow at the Peterson Institute. What do you do there? What's that involved?
Well, the Peterson Institute for International Economics is a think tank in Washington. We work on international global economic issues. And I was formerly the chief economist at the IMF, so the Peterson Institute lets me keep very engaged with those same issues of economic policy around the world. At MIT, I teach entrepreneurship. So you can see I'm a strong advocate for private sector and private sector-led growth in this country and almost everywhere. But having worked on all these international political economy, I'm aware that if you let the private sector or individuals in the private sector get too powerful, it can go very badly for the rest of us.
What are you telling your students about the future of entrepreneurship and business starting in this country?
I think it's very good. I think outside of the financial sector, there's an enormous amount of possibilities. In terms of technology development and commercialization, this is by far the best place in the world to be. And I think to the extent we go back more towards doing that, and a lot of the smart students who were thinking about going to finance are now looking for technology-type opportunities around MIT. I think that's very healthy, and that's where our longer-term future lies.
Here's Round Rock, Texas. Republican caller. Good morning.
Good morning. I have a quick question. The last president we had, President Bush, borrowed more money than all the presidents before him. And now we have trillion of dollars of debt with so many nations. How is that economically feasible for us? How can we claim to have money when we owe out so much money? And what is the country doing to pay these debts out? What's being done? Not only are people like me who's self-employed hurting right now, but the country itself has to be hurting when we owe so much money out. Thank you.
Well, the caller is absolutely right to stress the importance of indebtedness in this country. We're starting off this crisis with, according to the Congressional Budget Office, about 41% of GDP in debt. Now, that's a moderate level of indebtedness compared to other countries. But as we go through this, as we try to fight this crisis, there's a big budget deficit. I think it's a sensible fiscal stimulus. There's money that's going into the banks that I think could be deployed more effectively. If you add up all of these, and housing, of course, is being supported, if you add all this up, we'll probably roughly double the ratio of national debt to GDP. Now, that's doable. It's not going to bankrupt us. We can afford it. But we cannot afford to have another crisis like this any time in the next 20 years. that would bankrupt us. And so that's why coming out of this, you have to fight hard now to prevent a really serious depression. That's my view. But you also have to consider the structure of the banking system that got us into this and take actions to make sure that they and others can't get us into this kind of problem again in the foreseeable future.
That caller, following up on his comments on debt, the money section of the USA Today has a headline, "Consumers fall behind on loans at a record rate. Delinquencies increase with unemployment." What's this mean for the security, the safety of the banks if people aren't paying back their loans?
Oh, this is, of course, the real heart of the problem now, which is it's not just the financial sector having its own disruption. It's the real economy, real people losing jobs, people's incomes going down. That's where the problems are. And as that continues, you get exactly this, that people can't pay back their credit cards, can't pay their auto loans, and presumably will default more on their mortgages, which further impacts the banks. And that's why the government should have implemented a tough stress test to look at how the banks are going to do if the recession gets much worse. Unfortunately, for various reasons, they decided to do a very mild stress test, which they're also discussing the results of this week, and I don't think that's actually going to help us as a way forward.